You know, in 2025, the financial world just got completely turned on its head. Yeah, gold was glittering, that's for sure, but its wild cousin, silver, it went on a tear that left even the most seasoned traders absolutely breathless. So today, we're going to unravel the mystery of this absolutely explosive commodity boom.
Just look at this chart. We're not talking about some gentle climb here. This is a rocket launch. Prices didn't just creep up, they exploded, completely shattering records that had been standing for decades and, honestly, catching pretty much everyone off guard. So this really brings us to the two big questions we've got to tackle. First, what in the world lit the fuse on this silver rocket? And maybe more importantly for anyone trying to manage their money, when all the dust settles, is silver a real safe haven or is it just fool's gold?
All right, to solve this mystery, we first need to zoom out a bit and look at the bigger picture. See, it wasn't just silver. The entire world of commodities was basically on fire. Let's take a look at the economic environment that created this inferno in the first place.
What you're looking at here is a perfect storm. You had central banks hinting at rate cuts, you had inflation fears spooking investors out of cash, and global tensions were running really high. I mean, when people start to lose faith in paper money, where do they run? They run to hard assets, the stuff you can actually hold in your hand.
And here's a huge piece of the puzzle. As the US dollar gets weaker, anyone holding other currencies, say euros or yen, suddenly finds that silver is effectively on sale for them. And that simple fact, it acts like gasoline on the fire. It just supercharges demand from all over the world.
Okay, so the whole neighborhood was on fire, but silver's house burned the brightest. To really get why, we have to look at what makes silver so unique. Its story has a pretty special twist to it.
This really gets to the heart of what makes silver so different. It's got this split personality. You see, unlike gold, which is mostly just for investment or jewelry, more than half of all silver gets used up by industry. We're talking about a critical piece of solar panels, electric vehicles, and all kinds of electronics. It's both money and a high-tech metal.
And here's the plot twist. For 5 years straight, the world has been using more silver than we're digging out of the ground. Now, this isn't some one-time thing. This is a chronic shortage. Every single year, the world's stockpiles are just being drained to fill that gap.
So you might be asking, well, why not just mine more? Here's the problem. You can't really just go mine for silver by itself. See, most of it, over 70%, is just a byproduct of mining for other stuff, like copper, lead, and zinc. And since the production of those metals hasn't really kept pace, the silver supply is just, well, it's stuck.
So you have a brewing storm of big economic forces, this unique dual demand, and a chronic supply shortage. I mean, all the ingredients were there. So now, let's get to the main event, the thing that actually triggered the explosion, the great silver squeeze of 2025.
$53.55. Go ahead and remember that number. It isn't just a new record, it's the exact moment the market truly broke, smashing a peak that had stood for more than 40 years. This wasn't just volatility. This was pure financial chaos.
Okay, before we go any further, let's quickly define what we're talking about. A short squeeze is basically a vicious feedback loop. You have traders betting the price will fall, but when the price starts to rise fast, they're forced to buy it back to stop their losses. And what does that do? It pushes the price even higher, which forces more people to buy. It's pure financial panic.
So how did it happen? Well, first, the vaults in London, which is kind of the heart of the physical silver market, started to run dry. Then, traders who had sold paper silver contracts they didn't actually own were suddenly told, okay, time to deliver the real metal. To avoid defaulting, they had to scramble into the open market and buy physical silver at any price, and that's what triggered that vicious feedback loop.
And if you need just one number to understand the sheer desperation going on, it's this. Can you imagine having to pay an interest rate of over 100% just to borrow something for one night? That is not a functioning market, my friends. That's a full-blown crisis. It just shows the absolute terror of traders who could not get their hands on physical metal.
Okay, so the mystery of the price spike is solved. But this brings us right back to our second and maybe more crucial question. This wild ride was, sure, profitable for some, but does that make silver a reliable store of value? Let's put it head-to-head with the undisputed champion, gold.
First up, let's talk market size. The gold market is like a deep ocean. It's vast, and it's really hard to make big waves. The silver market, on the other hand, is about 9 times smaller. It's more like a lake. A big surge of buying or selling can move the price a lot and very, very quickly.
And that smaller size, well, it directly leads to volatility. As a general rule of thumb, whatever move gold makes, you can expect silver to make the same move but about 2 to 2.5 times bigger. And that's a real double-edged sword. You get bigger wins on the way up, but you face much, much bigger losses on the way down.
But, maybe the single biggest difference comes down to who's got your back. Gold is a core asset for pretty much every central bank in the world. They are the ultimate buyers, which creates a sort of price floor. Silver? It has no such safety net. There is no official buyer of last resort.
This chart just makes that point crystal clear. I mean, look at what makes up global reserves. You've got dollars, euros, and then gold making up a massive 18% chunk, right there with the euro. And silver? It is nowhere to be found. And that reveals a fundamental difference in how these two metals are treated in the global financial system.
And this quote just sums it up perfectly. Silver is gold on steroids. It really captures the essence of their relationship. Silver just amplifies everything, the good and the bad. It is the high-octane, high-risk version of its much more stable cousin.
So, we've seen what happened, and we've compared the key players. For our final act here, let's zoom out one last time to really understand the deeper meaning behind all this commodity chaos, and we'll do it through a very specific economic lens.
Now, to get this perspective, we first have to talk about the money we use every single day, fiat currency. All it is money created by government decree. It's backed by nothing but trust. Its value isn't tied to a physical thing, but to faith in the system that issues it.
Okay, so with that in mind, economists from the Austrian school would look at the silver squeeze very differently. They wouldn't see a healthy market at all. They'd see a symptom of a sick monetary system. They argue that when governments can basically create money from thin air, it will inevitably lose its value over time. And that pushes people into speculative assets like silver, creating the very bubbles we just witnessed.
Which leaves us with the ultimate question. Was the historic rally of 2025 the moment silver was finally recognized as a true store of value in a failing system? Or was it just the latest, most spectacular speculative bubble, inflated by distorted money and absolutely destined to pop? That right there is the billion-dollar question for all of us to think about.